Hey everyone, Trader Tim from E-mini Mind bringing you another Monday market analysis. Today is Monday, July 20th, 2015, and we've broken out of the short on the daily chart. We had talked about how if we came down to 2039s, there would probably be some big body candles chopping around, and once again, buyers stepped in. You notice we did not penetrate the lows from back here in March and April, and the buyer stepped in and we pushed higher. The grease deal, the stuff in Greece has been, some would say, resolved, and so some of that fear has been pulled out of the market. But regardless, there were a lot of people that were getting short at this point, and those positions have then been covered, and so those stops being hit is another catalyst for pushing the market higher. One thing to note is, if we don't come up and break highs, the swing high back here is pretty important. The high at 21.22s, which we've broken up at 21.26s. So we're looking to break highs of 21.34s. If we don't make it, I'd still look for a full halfway back. But at this point, it'd be nice to see a little bit of a move higher before getting that pullback. You'll notice the 2080s do line up with the highs, which would be support. What I want to talk about today, though, because we are moving into potentially what could be a nice trending couple of months here, I want to talk about swing trading a little bit. And if you look at the SPY, regardless if we break out or break down, I think we'll have some strong trends here over the next month or two, and even further than that. This recent rally has seen declining volume, something we talk about, relating everything together, relating your individual stock that you're trading to the S&P, relating the volume to the price. We're always looking for relationships. So this declining volume, increasing price, a little bit of a weak sentiment for the bears, for the bulls, a little bit of a widening formation where we start at a tight consolidation and make lower lows and higher highs. So we'll see if that ends up turning bearish. But in the meantime, when I'm looking for swing trading positions, when I'm looking for strong stocks to buy on pullbacks or weak stocks to buy on rallies, it's really that simple. So the setup that I'm using is I'm looking for the market, a strong stock, and we'll start with the S&P and then I'll flip through a handful of stocks here. But we want to see that pullback, and we're looking for a break above the high of the low bar in the pullback. So in this case, the market was trending down, 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 down. Here we put in a nice swing low, but the market never broke out of the high of that low. And so we had some inside days. We traded lower, put in a nice hammer, and once the market broke the high of the lowest bar in the trend, meaning the downtrend or the temporary pullback, that's when we had the catalyst or the momentum to take us and break swing highs. So I'm looking for a buy over the high, meaning put a buy stop or get long when the market breaks the high of the lowest bar in the trend, and then vice versa for shorts. I'm looking for a break of the low of the highest bar in the pullback in that trend. So let's take a look at let's see, Netflix. If we zoom in a little bit, we want to look for a break. We want a nice uptrend. That's number one. And the way you can find these stocks is to just start logging 52-week highs and 52-week lows, setting your scans for those stocks, and then just recording them. And the reason I wanted to talk about swing trading today is because we have stocks like Netflix, Google, Amazon that are pushing to new highs. And so those stocks will eventually pull back, and when they do, you want to be ready to jump back in or jump in for the first time. So all these little pullbacks, this is the lowest bar in the pullback. We're looking to buy over the highs, put your stop below lows. Let's see. So let's look at some of the big names. For instance, Google, moving sideways, but had a nice breakout. We want to see a push higher and then a small pullback, and you want to buy over the high of the lowest bar in that pullback. Apple, not quite there. We're getting earnings announcements. Again, this is a little bit premature in terms of not seeing a whole lot of setups right now, and as we talked about a couple of weeks ago, a lot of activity on the day trading side. Swing trading has been kind of slow, but I do sense kind of a shift and anticipate a lot of great trading setups on the swing trading side. So I just want everyone to be prepared and be ready. Amazon though is making new highs, and so you can see a little hammer here, and those hammers or those pullbacks are what we're looking to buy over. You can wait for an absolute breakout, but I prefer to wait or to not wait as long and get long above the high, the low bar in the pullback, and then put my stop below the lows. And then you can just trade, you can trail your stop as we go below. If we're moving higher, you can trail your stop up below the swing lows. A good example on the flip side here is Alcoa. Nice downtrend. We had a little bit of a pullback, and if you just get short below the low of the highest bar in the pullback, and then you can just, in this case, there weren't a whole lot of swing highs to move your stop down to, but you can even trail, if you want to be more aggressive, trail each candle individually. But that's basically the concept. Looking for already weak stocks, and you can see, Alcoa moving lower, lower, lower as the market's moving higher, higher, higher. So if you're shorting weak stocks and buying strong stocks, even when the market changes or the market has an up day or a down day, since your stocks are relatively strong and relatively weak to the market itself, they usually don't fluctuate as much. So the market maybe have a really strong day, but if you're selling, if you're shorting weak stocks, those stocks still might go down. And so you can really do a nice job of balancing your portfolio, or at least your swing trading portfolio, by saying, we're in a bull market, so I'm going to have 4 longs and 2 shorts, and balancing things that way. And it's really important to not only look at the individual positions, but how do those positions fit in with your entire portfolio. If we go to the VIX, you'll see we came back down to lows, back into the low teens. And typically when we're in the, especially the low teen region, that's when we see the nice trending, a little bit smaller body candles, which allows for you to trail your stop on the daily chart a little bit easier. So lower volatility makes for better swing trading, higher volatility makes for better day trading. So that's kind of what I wanted to talk about today. The S&P just about to break highs, and as is the Dow, kind of on its way. The NASDAQ is kind of the catalyst that shifted everything higher with a lot of these earnings announcements coming out on the NASDAQ and pushing the market higher. The Russell is really the only one that's kind of a little bit weary at this point, kind of rolling over. So we'll see if we can kind of form a pullback and then get a rally to push us higher, or if this rollover would coincide with a rollover in the S&P, at which point, a big trend back down to lows would be the most logical scenario at that point. And so we want to just kind of be ready for a breakout or a breakdown. But I think at this point there's a lot of steam, there's a lot of people jumping in here, especially if we start breaking highs. There will be a lot of people that will want to jump in and feel like they might have missed the move. And when you get a lot of people jumping in and basing their trades off of their emotions, that's when you can get some really big price swings. So you want to position yourself in front of those moves, or at least be prepared for these different potential scenarios, so that when they occur you can capitalize on them. So that's what I wanted to talk about today. If you have questions specifically, I've got a whole lot of a handful of videos in the members VIP area specifically talking about swing trading, and as always you can email me, tim@emoneymind.com. Thanks, and have a great week.